All right, well, hello, everybody. Welcome to today's webinar on managing central bank strategic performance with KPIs. I'm really excited about the turnout today. It seems like there's either a lot more central bank strategic planners out there than I expected, or else maybe everyone else just wants to know more about what these folks do. Today's topic will get at the basics of strategic KPI development within the context of a central bank strategy. We have two presenters who will each draw on their broad experience to make this topic real for you all within that context. As I present, I know there will be questions that come up. If you could, please use the Q&A box on the Zoom menu rather than the chat feature. That way we can all find the questions efficiently at the end and answer them as we have time. All right, now let me tell you a little bit about the presenters before I turn things over to Joe. Joe DiCarlo is a Senior Vice President and Senior Consulting Associate for Strategy Management Group and Balanced Scorecard Institute. He's got decades of experience in strategic planning, balanced scorecard implementation, change management, business model innovation. He's worked with private sector, public sector, nonprofit sectors. Joe's one of our road warriors. He's out there managing and supporting strategy and performance projects for hundreds of organizations. He's worked with Cisco and ADP and the U.S. Air Force, a number of Federal Reserve and central banks around the world. He's a certified balanced scorecard master professional, a KPI professional, project manager, management master professional. He's got an MBA. And then joining him today is Don May. Don is a global account executive at Spider Strategies, where he focuses on helping organizations use Spider Impact software to improve strategic performance through data-driven insights, effective strategy execution, and so forth. He's the guy we look to when our clients need help tracking their KPIs, linking initiatives to KPIs, providing visualization and reporting tools that help turn strategic plans into actionable, measurable results. So once Joe is done with his part, Don will do a demo of what a system of central bank KPIs would look like within the Spider Impact software context. All right, Joe.
All right, thank you, David. And welcome, Don, and welcome, everyone. I'd like to start with just kind of level setting from the context of a central bank, and what they're monitoring, what they're looking at, what they're drawing data from, what they're modeling. But more importantly, a lot of what is done at central banks around the world, and they're all different, varies by country. We're most familiar here in the U.S. with Federal Reserve USA for the work we've done there. But I've had about 7 or 8 different international central banks, and they're all a little bit different in what they want their central bank to do for the country and the outcome. Obviously, the central banks are the debt managers for the countries going forward. They set monetary policy. They do monitor consumption up and down, but as you can see there in the US, that particular number originates with the Bureau of Labor Statistics in terms of consumption, and that's the Consumer Price Index that usually gets put out. But the central banks use that data in their analysis and modeling as well. They do support the government. This is one thing that's very common across all countries, is the central banks manage the payment systems that need to be done throughout the organization. They're looking at interest rates, monitoring those if they're going up or down. They do create growth forecasts going forward. They do monitor gross domestic product so they can see if they're making progress on growth at a country level. And then they do look at trade balances as well, but they do that in the States through something called the Census Bureau and the Bureau of Economic Analysis, which, by the way, that bureau originates a lot of details that the central banks use. They do create economic forecasts for the country. They do follow inflation and the income equality. They do monitor that, even though that's heavily monitored by the Consumer Price Index. They look at income quality to see fundamentally if the citizens are keeping up with what the country wants to do. And they do look heavily at the employment rates that are going through. So this is one of those things where the central bank has a lot of data collection and analysis to do. And I think if any of you have been watching the news here in the States, this is a constant battle between the executive branch of government and the Federal Reserve as to what that inflation rate should be, and et cetera, et cetera. Now, some of what they do, what they monitor and model and report on, and again, I'm using the US Federal Reserve as an example, but across the seven or eight central banks that I've worked with across the globe, they have the same things. They may call them something different, but they're looking at the same types of reports. So this is one thing that is common across most central banks around the world. They're looking at the Federal Open Market Committee statements 8 times a year. This is pretty recent, and they keep this up to date. They look at interest rates, summary of the projections, gross domestic product again, inflation, unemployment, and also the interest rates. I'm not going to go into the details on these because these are the things that are mandated. Now, that's a big difference between the central banks and the commercial banks I work with. There's no mistake. The commercial banks in the world, they exist to make money. They're profit-driven organizations with their various products and services that they charge for, allowing for deposits, allowing for checking accounts, making loans, et cetera, et cetera. Where the central banks are under mandate from the government of what the government expects them to manage and look at. Consequently, there's an interesting thing that evolves from a central bank balanced scorecard or strategy, is that most times, and in fact, all the time, when we work with clients to create strategies, those are strategic objectives that result are things that they're trying to improve and move forward. But with that comes the ability to have influence on everything about that particular strategic objective. Now, in the case of central banks, where they're mandated to do the certain functions they have to do, they may not have total control over some of the things that are related to strategic objectives on that central bank balanced scorecard. So they look at banking system reports on stability. That's a big one. Here in the States, the Dodd-Frank stress test, testing all the banks after the 2008 cratering of the economy that was driven by what was going on at the commercial banks. That came into play. So now the stress testing goes on across the globe, as well as looking at monetary and economic databases. Every country has their own versions of this, and it tracks money supply, fiscal policy, that type of thing going forward. Now, also, they look at the consumer, labor, and community affairs. For instance, in the Federal Reserve, and Federal Reserve banks across the U.S. are in different territories, and each of those regional ones in the U.S. look at different things in relationship to the commercial banks and how they can help them become more successful, and also do something that's very common in central banks, which is making sure they have programs that have financial inclusion across the population. That is very significant, depending on what country and what the development level of the country is. In some central banks, it's the key thing is to make sure that their citizens and population understand what it means to be in a banking system, because they may be remote, they may be away from services that they can bring that the city centers provide. But again, it's something that central banks focus on. And I have some commercial banks in some commercial countries also do the same thing. The other thing too that you'll discover when you look at, if you look at the analysis of the 180 to 190 central banks that there are in the world, the one thing that pops up, and in some geographic areas, there's a single bank that acts like the central bank for the region. The one that's most familiar to us is the Eastern Caribbean Central Bank, ECCB, which acts as the central bank for regulatory control, advice, and monitoring across about 6 or 7 different Caribbean countries, because the countries just don't have that amount of resources to support a single central bank. And so that's another thing that works into that 180 to 190 central banks across the world. The other thing that the central banks work on is obviously they control the currency, printing money and not printing money. and then also taking a look at what the debt structure is, and all the other digital payments is coming on scene very heavily now. And then, of course, they have a very heavy research and transparency function, at least in the Federal Reserve in the States. Again, this is pretty similar to most central banks around the world. And they issue a lot of reports that act as information to the entire country, to the organizations, to the businesses, and to the other commercial banks that are in that particular area. Now, when we go into this process with either central banks or commercial banks, it all starts with their strategy. We have a lot of potential clients call us and say, I need KPIs for this. I need key performance indicators for that. And our first question has to be, well, first, do you have a strategy that is composed of something that resembles strategic objectives? And you would be surprised how many times the answer is no. I was sitting in a session in December of last year in Saudi Arabia, and we had a session. They came into a session with the local partner that we have there, Progress Consulting, and we asked them questions about how their business is run, et cetera. And the next thing you know, they were saying, we have these meetings and we have these reports where we report a lot of KPIs, but everybody always asks, what are we trying to resolve? What are we trying to solve? And as we let them talk out, I finally got to this point. I said, do you have strategic objectives for all those KPIs? And the answer was no. They were just on a roll to create a whole series of KPIs with nothing to prove what the strategic context was that they had to build those KPIs on. So it starts with getting the view of the strategic objectives and bringing that down into a process that looks at the strategic objective description, intended result, and of course, there's usually initiatives that are associated around that going forward. And then we take them through a process that says, knowing what we know about the objective and the description and the intended result, let's start looking at how we define these KPIs going forward. Well, the first thing is we have to make sure that that intended result is ironclad. It's end state, it's measurable. And of course, any organization can usually create a lot of intended results for any one objective. And what comes out in the final wash, so to speak, is that some of them are definitely end outcome, which you want it to be for strategic objectives, and some will be intermediate outcomes. Like if you have a sales program and you create a whole bunch of sales, that's good. That's what you're looking for. But along the way, will you have an intermediate outcome, which when you are seeing your retention numbers of your customers are increasing as well. Not the exact output for that objective, but it's an intermediate outcome that was done by that one action of measuring sales, if it were web sales or something like that. You have some alternative ways to find the KPIs, either through direct measure. Everybody would love that if everything could be measured directly. Sometimes indirect by something you use the process flow or fishbone or cause and effect analysis, or which is very heavily played across all organizations, government, nonprofit, and commercial banks, which are logic model, which is very particular about identifying input, process, and output KPIs, and also then outcome. And we're looking for the outcome ones on the overall strategy going forward. And then you have the ability to create indices or scores using a whole number of operational KPIs that wrap up into one strategic objective. Necessary to follow because they all contribute to the success of the objective going forward. And then you have to define and document and get them into a system like Don's going to show you here in just a few minutes. So what are some of the example KPIs? I went back through those 8 or 9 central banks I've worked with around the world, and I started taking a look at where I could see repetitive ones that came out. And these are the top winners, so to speak, on that analysis. And again, remember that some of these things are mandated by the government. And what's that mandating is, well, The government knows it needs this kind of inflation rate to manage the government properly and achieve their goals. And so they're going to get with the central bank and go through a lot of what I call discussion sessions across the conference table and said, this is what we need to move at, and this is what we need to get to. So in effect, that goes back to something I said earlier, is that the central bank is kind of like stuck in a rock and a hard place because they know what the government needs. They know what their modeling and their results and their analysis and their research can produce. And now we have to have a lot of conversations about what that target is going to be. So to strengthen the public confidence in the monetary system, if the measure is the inflation rate is within the target range, and the target range was set by the government and by what the central bank thinks they could deliver. And that's where this tug of war kind of goes on between executive branches of government and the central bank. There's this one about increased financial inclusion. That's the one I talked about, where the population really gets educated about what banking is all about. And notice that the central bank does this, but those once that population is educated, they're going to go to the commercial banks because they're the ones that handle the savings deposits, the checking accounts, the loans, that type of thing. But it works in a symbiotic status that the central bank is pushing out the knowledge frame of that. So price stability, strengthen that. It's the volatility index of inflation, right back to that first one, which was a negotiated, so to speak, target range with the government. Transparency and communication, there can never be enough of this kind of strategic objective in KPI, because how often you publish and update your policies drives the public trust index up. And because it's a survey, it will definitely be an index going forward. Increasing economic growth, of course, real GDP growth. And now, at least in the US and a lot of other countries, that ratio between GDP and debt is one that's really under the microscope now, because this is something that the central bank can watch very closely when it reports out. Nobody likes to see that. And I think if you've been following the papers, the US is one of those that's in kind of I would say, a tinted red zone right now, because we're just not being able to keep it under control. So enhanced management of foreign reserves, this is another thing that the central banks can do. And this one, they probably would have a little bit more control on, as I said, for objective, that they can make sure that they've got those, know what they need and make the government understand exactly what's good and what's bad. Strengthen the exchange rate. Again, the fluctuation in the band adherence. This is something that they may not have control on, because every time, and we see this with our partners around the world, every time when the US through the Federal Reserve makes a change in the exchange rate, it bounces and it ricochets off all the banks across the globe. So they have to deal with this moving target, so to speak, about when they want to do exchange rates and do payments and that type of thing. Government banking efficiently. Exactly. I mean, this is something that every bank, regardless of commercial or central, wants to make sure that those transactions are error-free, easy to do, and cost as low as per on a transaction. Cost efficiency in the central banks is operating costs. Everybody has to measure costs. That's an interesting concept about cost, but when you start to delineate strategy down through an organization, every part of the bank, be it central or commercial, has a place to play in keeping their department or banking as a whole under control, staying within the budgets. Strengthen the financial sector resilience, banking sector stress test. It goes back to something like Frank Dodd here in the States, but every bank has this across the globe. Big organizations like the International Monetary Fund, they put all of their loans and everything, all of their entities through a stress test to make sure that they've got good capabilities of getting a return and getting the return when they wanted it. Effective monetary policy, the time lag between policy change and market response. It's interesting. There is a question that we had already about, how could you, something along the lines of, how do you relate what they want at the monetary policy at the government level and translate that down to the objectives in the central bank. This is one of those areas that you have to find out what each party needs, what the bank thinks can be delivered, and come to negotiated numbers on that going forward. Bank supervision and regulation, number of institutions in compliance, that is just goes without saying. This is the central bank's one of their biggest requirements is to make sure that all the banks in the country, commercial, are under regulatory compliance. The one I mentioned with ECCB in some other Caribbean countries, they have oversight, so they put their member banks through those commercial banks through those stress tests going forward. Payment system reliability. This is on every central bank scorecard that I've worked with because they need those payments to flow seamlessly with no transaction failures and when they're executed so that the payment system can provide the income and the resolution of accounts receivable, payable, et cetera, at every time. And the risk management frameworks, this has been ramped up throughout the years. I think COVID taught every factor of economics and entities within the world a lesson about understanding where the risks are and identify to make sure that they can resolve them. And then crisis response mechanism, response time for financial distress. That may be things like, I know in the Caribbean where I work, there's always needs to be a response to things like climate events, those types of things. Also, there can be other geopolitical movements that throw things into financial stress. They need to make sure that they've got those on their radar screen. And this next set is very much core to any bank, commercial or central, is making sure that their workforce, they've got the right workforce at the right time with the right technology, infrastructure, technology, and governance. So this section is like workforce capabilities, make sure the staff stays certified, strengthen research and data analytics, keep pumping out those research papers and funding the research that needs to be done. And then technology infrastructure, digital process, everyone's under digital transformations now and IT uptime. And then, of course, the organizational agility, time to implement policies, working in conjunction with what government needs and what the central banks think the government needs. And then increased knowledge of management and innovation, employee innovation suggestions implemented. You would not believe how many organizations that I've worked with, not just central banks, but organizations in general, where they know they want to innovate, they know they need to change, but then I just ask a very simple question. Do you have an employee suggestion system or innovation suggestion system? And they said, no. I said, well, first order of business is let's start talking to those at the front lines, those that are out there doing this modeling research and that type of thing, and see what they need going forward. Now I'm going to turn it over to Don May, who's going to take us through an update, an overview on doing a system review, a demo system, and who will start with these things, and then Don will pick it up from here.
Thanks, Joe. So great to meet everybody. I'm Don May. I'm one of the global account execs for Spider Strategies, as David indicated in the beginning, right outside Boston, Massachusetts, and I'm happy to be with you today to discuss Spider Strategies. So with the slide on the screen, Joe is asking, who is Spider Strategies? And so we are one of the world's leading performance management strategic platforms, founded in 2003, as you can see on the slide. We help organizations all around the world figure out ways to make tracking their strategic performance management easy and automated. And what I'm going to do today is I'm going to show you sort of how that works when looking through the lens of a central bank, utilizing our system to not only create KPIs, but as Joe said, align those to the strategic objectives that you need to figure out exactly what is the end result that we're actually trying to achieve. Joe, I'm going to just take it from here and go on to
Okay, there we go.
All right.
I'll stop sharing.
Thank you. Okay, so once you have decided and you've worked with an organization like Balanced Scorecard Institute and you've figured out, okay, what KPIs that we're going to track, how we're going to relate those to strategic objectives, then you need a system to do that with, right? And so what is Spider Impact? So we talked about it being a place where you can manage your strategic performance. But what it will actually allow you to do is to create scorecards, charts, reports, dashboards, track strategic initiatives, align those directly with the objectives or KPIs that you're trying to affect performance in. You can schedule alerts. You can utilize BI tools to analyze data, all within the same system. And then once you've created all of the visualizations like charts, reports, and things like that, you can actually even present them right from the software. So you don't need to have multiple platforms open. You can get all this information from all these disparate places into one system and then utilize that to showcase what the performance looks like for, the central bank. And so shout out to the Bank of Jamaica for allowing us to use their annual report and a little bit of their strategy to kind of showcase how this would work in our system. And so what I want to do here is take a look at sort of, their vision and their mission is to formulate and implement monetary and regulatory policies to promote price and financial system stability, right? And so how do we do that? After they've worked with an organization like the BSI to determine what is the best way for us to do that, how do we then take that and put that into a system that helps us hit our strategic priorities of supporting the mandate, digital transformation, and their culture transformation, right? And that is going to sort of be based on what do they come up with as a strategy map, right? So how do we take the information that we need to hit the objectives that we're trying to achieve, and then how do we put that in a way that allows us to track it and distribute that information to all of our stakeholders in a way that makes sense, in a way that they can sort of understand what that language is. And so in order to do that, what I want to do first is sort of take a quick trip to see exactly how the software works. So I'm going to pop out of this presentation and just go over into the navigation pane of Spider Impact. So as you can see, this program works in browser, so you're able to use Firefox, Chrome, Safari, Edge, all those different options. It'll work on any device, so phone, tablet, PC. It will also adjust its screen size accordingly based upon the device that you're on for maximum viewing and allow you to enter data on any of those platforms. So you're not limited, if you're using a specific device. On the left side, what you'll see is the navigation pane. And here you'll see what we call the bricks, right? How do we build this information in the system, starting with the foundation around scorecards, initiatives, and then different data sets that you're going to bring in to not only create the KPIs that you need, but to also create the visualizations that occur after them. Very simply starts with the hierarchical structure of your organization. And so one thing Spider Impact allows you to do is to have total freedom to create the hierarchy that you need based upon how you're going to track these metrics. And so you can see here for Bank of Jamaica, we've got all these multiple departments, whether it's human resources or research and economic programming or banking and currency operations. It's very possible that within the organization, all of these specific metrics have their own scorecards. They have their own distinct KPIs that they need to track. And as such, they need to live in a separate world, right? So even though they're underneath the hierarchy of what is the Bank of Jamaica, maybe they have these distinct KPIs that they need to have tracked that don't necessarily roll up throughout the entire organization. There also may be opportunities where objectives do cascade all the way down through the organization. And so that's where you have this ability to create templates for these, which allow you to have scorecards that mirror each other and cascade those metrics down through multiple levels, whether that be a department, whether it's a business unit, a region, a branch, or even an individual, and then have that information roll back up. So if we take a look at Carly here, so Carly has her own scorecard. She's a customer support person. She has different metrics that she's going after, like calls answered and things like that. And they roll up to her manager, Mike, and Mike, his scorecard is an aggregate of all of the employees that are underneath him. What happens if Carly moves over and starts working for Mary? Well, all we have to do is drag and drop, right? And so now Carly's numbers are going to affect Mary's scorecard, and then that will roll up and join the rest of customer support. So you can see that there's a few ways that you can set up this hierarchy. You can, again, have them be distinct departments or organizations, or you can have that be a template that rolls up to higher levels. Once you have your hierarchy set up, that's when you're going to get into how do we start creating these metrics? And so we had seen the strategy map for Bank of Jamaica showcasing their objectives, but now how do we put those into a system? And so what we see here is we are able to take the entire strategic alignment and put it into one place. So not only do we have the individual KPIs, we have perspectives and objectives to showcase the end results of what we're trying to achieve by tracking those metrics. When it comes to creating a metric in the system, it's a very simple process. You have the name that you're going, whatever you're going to have for the name of the KPI. You're going to determine how is it weighted, right? So within whatever objective or perspective it's in, how do we decide, what value does it play within that spectrum, right? How are we going to score it? So Spider Impact uses a system, a concept called normalized scoring. And what that allows you to do is allows you to have all these different types of measures. So whether they're numbers based, they're monetary, so their currency, their percentages, maybe they're subjective, like meets expectations, exceeds expectations, or maybe they're driven from initiative and project completion, like percent complete or money spent. You're able to align these in the same scorecard by using the system of normalized scoring. And so what the system allows you to do is it says, okay, if I have a metric and I have results, what is my score going to be? And generally, by default, the system does that by giving it a value of 0 through 10. And that is going to be based on how you decide that you want to use for a scoring type. So in the system, you're going to have multiple scoring types, things where you can set thresholds to each of these metrics that then allow the system to determine what the score is going to be. So here you can see we've got things like simple yes, no's, or what if we only have one threshold and we just want to hit the goal? We have different multicolored ranges. So if you've got 0 to 20, 20 to 40, 40 to 60, things like that. If you have areas where you want to stabilize something, right? So if a monetary policy or inflation, you want to keep it within a certain range, you have the ability to set that scoring type so that you can determine if it's too high or too low. And then finally, you've got some text-based scoring types that I'll show you in a second, where you can start to give values to things like high performer, low performer, or meets expectations, exceeds expectations, things like that in the system. You get to determine how you want to track that. So is that every day? Is it every month? Is it by quarter? Is it just a yearly metric? What data type does it have? Again, is it a number? Is it a percentage? Is it currency? What type of currency is it? All the system carries all of the world's currencies. So you're able to utilize that when you're creating your metric. How many decimal points do we want it to go down? And then finally, how is this measure value obtained, right? So is it a manual value that either has to be input by a person or brought in by a third-party system? Or is it something that is calculated? Or like I said, does it roll up from a lower level? All of these things are decided when you're creating the metric. And then all you do is simply set the thresholds, decides who at the organization is the owner of this metric, and then who is the updater. And then from there, you have it created. Then you'll see your performance based upon those numbers. So here we have a 48% value on thresholds of 58 and 70%, giving us a score of 0.6. We can see the 12-period trend for the month. And one great thing about our software is that just dynamically, by choosing from a dropdown, you're able to adjust the actual time periods. So right now we're looking at it for May, but if we wanted to see what April looked like, we just hit the caret. If we wanted to see what the quarter looked like, we would just handle that, right? And so now this system is looking at this from a quarterly perspective as opposed to a monthly perspective in the system. Make that a little bit bigger so everyone can see it. So now we've got the quarterly view of this metric as opposed to the monthly view, all by just simply changing the drop down that we're looking at here. When looking at the scorecard over here, what you'll see is we've got the perspectives, we got the objectives. The perspectives, they're going to give you an overall score based on the weighting of the underlying objectives. The objectives are going to do the same thing based upon the specific KPIs underneath. We talked about creating a metric here. We've got index types of scoring for Bank of Jamaica. That's what they're using. So everything is sort of either a ratio like inflation target or the financial stability, system stability score. All of these are, for the most part, driven by external either whether it's systems, reports, different things like that. And so how do you get it into Spider Impact? And so the easiest way is obviously just to come in and manually enter that value. But you can also come in here and import this value from any number of other locations. So if you have this information stored on Excel spreadsheets or in Google Sheets, if you have it in databases, ERPs, if it's in third-party systems, like NetSuite, you have the ability to take that information and then automate the process of getting it into Spider Impact, so then you can have it updated. Once you have the KPI updated in the system, that allows you to then take and create visualizations around it. So if you wanted to see, okay, what does a dashboard look like for our business processes? Well, here you can see that we're taking the strategic objectives 4 and 5 related to that single perspective, and we can look at it from here and see what the performance looks like in a visually pleasing way, utilizing the scorecard underneath. This is, again, all dynamically based on what the performance looked like for the actual time period that we had in the system. So if I show results, now we're looking at it quarterly, and these are all hyperlinked so that I could click and get taken directly into the scorecard so you can see exactly what's going on with that particular metric. We talked about the other KPI options. So what do we do if, something is subjective, right? And so here you have the ability to say, okay, for April, we exceeded expectations. In May, we met them. In June, it was significantly exceeded them. You can add notes around the performance to give context to what happened during that particular time. So that way, you're not just limited to KPIs that have, traditional values. What if it's an index-based KPI, right? That's based on underlying metrics. So we can see here for Bank of Jamaica, they have a staff index based on things like retention rate, their turnover rate, promotion rate, right? So these are all metrics that are created in the system and probably driven by an ERP for HR. Those all come into our system. And now here we have a calculated metric that's taking all of those different KPIs underneath, utilizing an equation and generating the index score that we want to see here for the staff index. And again, they've set thresholds around that so they can indicate to themselves what the performance looks like for that particular index KPI. If we go back to their strategy map really quickly, what you'll see here is that not only do they have strategic objectives and they have measures that they're tracking, but they also have initiatives that are being run. And so again, the beauty of Spider Impact is that if you incorporated all of these in your balanced scorecard, you have the ability to also track those initiatives inside the system. And it becomes a sort of twofold scenario where not only are you able to, hi, Joe.
No, sorry.
Not only are you able to track the initiatives, you have tasks, subtasks, milestones that maybe make up, right, the initiative that you're trying to complete. In this instance, the BOJ is trying to enhance banking system competition. So we're running an initiative. We've got tasks, engage fintech stakeholders, draft competitive banking framework. So different tasks that are completed. You have the ability to see sort of how you're operating from a Gantt chart mode to see what's going on with that particular initiative. And then, like I said, you have now the ability to say, okay, we're running this initiative to actually affect performance somewhere. And so let's say it's in business processes. And so we want to improve monetary regulatory processes by managing this initiative. You can align those in the system, right? You saw how easy I was able to add that. And what the system is going to do is it's going to take data and use algorithms to say, okay, based upon what you're doing with this initiative, the money that you're spending, the time that it's taking, and then we're going to take a look at the actual data of the KPI that you've aligned with it. And it's going to generate a report that says whether it thinks we're having a negative, positive, or no impact on that particular KPI. So right now it's saying we're having no impact. And so this allows us to course correct on the fly to see exactly, how we can affect change within this particular, not only initiative, but the metric that we're trying to associate it with. At the same time, you can take these initiatives and turn them into dashboards as well. So if I needed to see exactly what was going on with that particular initiative itself, here I could see what's going on with the Enhanced Banking System Competition Initiative from a completion percentage, a budget perspective, and I have that Gantt chart right there on the screen for me. So I can see everything that's going on with it. In terms of linking it to today's topic in KPIs, well, you can take any of the metrics that are associated with the initiative, things like percent complete, money spent, days elapsed, and you can actually turn those into metrics that you can utilize in the system. So we have this initiative-based KPI here where we're conducting market analysis as one of the tasks. We want to see the percent complete. And what it's doing is it's showing me where is this coming from. And that's right here from this conduct market analysis task, right? So I have the ability to take this task, take the updates that are being provided within the initiative platform, and then turn them into KPIs that are now existing on the screen. Sorry, it's this one. Right. And so this gives you the ability to not only, again, utilize the entire balance scorecard. So you have your objectives, you have your measures, but you also have the initiatives that you can track in the system. You can have beautiful dashboards for, but also turn those into the KPIs if the KPIs are what you're caring about, right? So if you're really looking at, if you create your balance scorecard and the metrics are generally based on the completion of projects, this is a great way for you to execute that in our system. And then finally, what's going to happen is you have this ability to take all of these measures. Not only can they come from regular ERP systems, they can also come from data sets. So if you have raw data that you just need to dump into the system coming from whether it's a database or from an Excel spreadsheet, right? Here we have records. And so Joe talked about financial inclusion being a very important KPI. And so, in this instance, we took it and said, okay, what if the central bank or even a commercial bank was able to do a survey to generate responses to ask people if they've added formalized financial services to their portfolios. And what we have here are all of the responses that came in. And then we can see that they get broken down, maybe by age range or by gender or by race in the system. And so that can also be turned into dashboards, right? So if we wanted to see that information in a more visually pleasing way, here it is, we can start to filter out. So for Q2 in 2025, if we wanted to see all of the female respondents who were 18 to 24, we could see how many people added financial services to their portfolios. At the same time, we have the ability to turn that data set data into KPI metrics. And so now we also have it as a scorecard. And so all of those age ranges and gender types and races are coming in. So based upon that data set data, it is being fed here and generating the scorecard and allowing you to create a scorecard based upon those data set metrics. And so that then allows you to create a dashboard that is based upon those with the speedo gauges and different things like that. And again, it's all going to be dynamically based on the performance that it sees for the responses for those particular time periods. And you take
Don,
real hand raised this time.
This time for real. We have a question that came in Q&A that is so appropriate to what you just got done showing from Amelia that said, is the actual achievement manually loaded for the consolidated performance to be seen? And I think you just answered it, but Amelia, if I'm interpreting your question, I think that Don just covered that in terms of manual versus automated loading.
Yeah, so again, it could be done by either, right? And so either I manually upload this information. Again, in this instance, this is a CSV file, but we could link directly to a third-party system to bring this data in and then have it mapped directly to either the KPIs or the dashboards or the reports that I want to show on the system.
Well, thank you, Dan.
No worries. The second thing it'll allow you to do though is create forms, right? And so let's say that we need to get this information from constituents or from the other banks that we're working with. We can actually, instead of having someone manually pull the data, we can actually just send them a link to a form that we've created inside Spider Impact. And so this form right here that I've created, it's got multiple tabs. It's got logic based to it, which I'll show you in a second. So if I click yes, it's going to go one way. If I click no, it'll go the other. But all that happens is I'm able to share it via a link. And so now anyone has access to fill out the form without actually coming into the Spider Impact system. And so here we can see that if I were to say, no, I haven't added anything, and I click submit, it's just going to say, thank you for your submission. It's not going to do anything else. But if I were to say yes, it's now going to take me into the actual form that I want to fill out. And then once this data is collected, it's going to then be added to that data set, which will then show up on the dashboard that you've seen. the ability to create dashboards is one of the greatest features of Spider Impact. Not only do you have this ability to create all sorts of charts and reports within the system, you're able to sort of accumulate them onto one page that is basically an endless white space. It doesn't really have a grid that you have to follow. You can sort of place things wherever you want. And so if you needed to have a dashboard showcasing different tiered measures between executives and the team, if you wanted to see the initiatives, right? If you wanted to look at your strategy map again, right? All of these are live and dynamic for you based upon the underlying scorecards. And the best part is that as soon as the data gets updated for the metric, all of the dashboards and corresponding charts and reports will also update for you. And then finally, you put all this together into a briefing presentation in the system. So as I started with here, now I'm in presentation mode. We want to set this to be a presentation for the month of May. And we're going to start to go through this. And so now we can click on the specific items, right? Go into the scorecard, have conversations, maybe see if there are any notes, start a new initiative around it, and then click right back up and I'm in my slides and I can continue going through the particular information that I want to present here in this briefing presentation. Whether it's different strategy maps or whether it is those tiered dashboards, you can see that they can all get added into the Spider briefing. So I will pause here. If you want to, have a look at it, you can schedule a demo. We can go through it to see how it will be used relevant to your context. Maybe you have just different kinds of KPIs and you want to see how they would work in the system. We'd be more than happy to do that for you. Joe, back to you.
All right, thank you, Don. Let me get back into deck here. What?
Nice job, guys. While Joe's pulling that back up, I just wanted to add a quick question. I think and while people are asking questions on the Q&A, tell me about the change management effort related to getting everybody on the same page. Let's say I'm managing strategy for a central bank, and I've got a team over here that's talking about goals, and another team over here that's talking about objectives and priorities, and our IT department, they're using OKRs. And meanwhile, on the software side, we've got a team over here using a business intelligence tool, and somebody over here is using SAS, and there's a whole bunch of teams that are using Excel, and they like their Excel, by the way. They don't want to use your new fancy tool. What kind of approach do you take in terms of managing that change and trying to get people into on the same page using the same systems? Joe, do you want to go first?
Sure. Well, the first thing, David, is once we've heard from everyone that's in that group or in that population that has their view of what performance management output should look like, we need to get settled down to a common glossary of terms. We need to make sure that everybody's calling the same thing in the same manner and relates to the same business. And it's not easy. And the first goes, later on within hours or days, we'll still hear people using the old terminology, and they just have to be pointed back to the final glossary. The other thing is you have to schedule follow-up meetings because it's not a light switch flip to get this done all at once. And you have to have a series of cadence meetings where everybody can be thought and input to what's coming on board and where we're going downstream and what they need to understand and what they need to contribute going forward. Don, anything from your side?
Yeah, the biggest thing that we see is if you involve everyone in the process, then it makes it a lot easier for them to sort of disassociate from that software package that maybe they love so well. Like maybe they really love Excel, but at the same time, in the system, you could link directly to a third-party software to pull the data in automatically and save yourself hours of time in terms of having to, accumulate that data to present it. So by not having just like one person in charge of this rollout, having everybody involved in it, what you'll see is that the system is so easy to use that people start to make the change on their own, saying like, oh, okay, I'd rather do it in Spider Impact, for instance, as opposed to Power BI, just because it's just a little bit more intuitive in terms of how I need to create this visualization that's going to automatically update based on the third-party connection. And I think that that's the best way to do it. If you try to have one person in charge of the whole thing, that's where it sort of stumbles. But if you have everybody involved at the same time in terms of having buy into their metrics, to the thresholds that are set, and then in terms of the scorecards and visualizations that get created, it makes it much easier for you to have that change management.
Very good. Joe, do you want to finish up and then we'll come back to the questions?
Sure. Just in closing here, the Institute has several sources of capabilities to assist central banks, regional banks, commercial banks, and we have our flagship Key Performance Indicator professional course, which is certified both by the BSI and George Washington University available, and that's both on-site and online. So you have some options as to how you want to connect. And then we do provide KPI advisory services that are very specific to the questions that a central bank or commercial bank would want to use in looking at the bank's operational efficiency. I mean, we got the permission from Central Bank of Jamaica to use theirs. They've been a long-time client, starting way back before COVID, and to get to their initial scorecard. And that scorecard that you saw is an evolutionary one over time from back pre-COVID. And one of the services that we provided them, for instance, at the very beginning of COVID, they were foresight enough driven that we ran a scenario planning for what's the bank landscape going to look like coming out of COVID. And that drove a second iteration or evolutionary of the scorecard that you saw there. So those are some of the advisory services that we can provide. And you have the contact information to get to us or on the introduction screen that we had before. David?
All right. While you were talking, a couple of questions came in, and we actually have some questions from beforehand. How can central banks ensure that their KPIs align with the national economic development goals without compromising their operational independence?
That starts with way back at the beginning of this presentation where I mentioned you're going to have a series of meetings so that both parties, the government and the central bank, can understand exactly what the government needs and what they're looking for, what the capabilities are of the central bank to produce those outputs. And that's going to be a series of meetings that go on until resolution. You come to concurrence. I mean, the only thing you can come to is a concurrence here as to what the government needs, and you understand it from the central bank perspective, and then the government understands what the central bank can do, and the central bank may have to understand what they may have to change or do to produce what the government wants. But it's very much multiple face-to-face discussions and come to concurrence as to what those things are and what the bank's going to need to do to get those. I don't have any other secret sauce to get into that, answer that question, but it takes a lot of discussions and going forward from experiences around the world. It's the same. It's the same.
But Don, there is sort of a software element to that kind of question. Because the way I think of it is we have external stakeholders that have desired outcomes, and I'm trying to align the contributing factors internally, operationally, with those desired outcomes. Don, is there a way to report to external stakeholders what they want to know, in and of itself as a separate report, as opposed, and have it be separate from what I'm reporting internally and in terms of my day-to-day operations, and sort of keep those stories separate. You're on mute. Yeah.
Of course. Yeah, absolutely. So one of the features of Spider Impact, we call it shared dashboards. And so what that would allow you to do is to create a dashboard inside of, Spider Impact based on specific KPIs that these external stakeholders might care about. And then what you're able to do is you can then either A, send them just a regular link to view the dashboard without ever accessing your Spider Impact instance, or B, you get this embeddable code that you can then put onto either your website or a website that's shared with those external stakeholders that would just display that dashboard. And then one of the real key features about it is you can actually make it dynamic so it stays relative. So what will happen is, if it's a weekly or a monthly or a quarterly dashboard, it will just update itself automatically on that timeline. So once you've shared it on that external website, for instance, it's just going to automatically update for June once we hit June without you ever having to touch it again. So as those KPIs get updated in the system, those dashboards will automatically get updated and then present to those external stakeholders without you ever having to touch it, and they won't ever have access into your Spider Impact system.
Very good. All right. Joe, what frameworks have proven most effective in translating high-level monetary policy objectives into KPIs?
Once again, you're going to have to go through the research, and this takes very, very deliberate and in-depth research through those monetary policies to first translate into what I consider to be strategic language as to what they're looking for. You're going to have to get consensus with the authors and the source of those monetary policies to make sure you have interpreted it correctly first, and then set about creating the objectives and the KPIs, and then come back one more time to the source and say, does this deliver on what you're looking for? Again, there's no automatic transition in that regard, because people have to be able to interpret the monetary policy that you're trying to create performance measures for going forward. I wish I had a more elaborate pinpoint on frameworks, but it takes a discussion and a lot of research analysis.
The only thing I would add to your answer is that we have obviously our generic process, the MPRA performance measurement development process that we use to develop measures. It's not central bank specific, but it's designed to help somebody articulate what you're trying to accomplish and create alignment between objectives and so forth. All right, got another question for Don. I am calling in from rural Kenya. We are establishing for the first time the whole notion of strategy and performance management. First time creating scorecards, etc. For a BI tool, we are leveraging Power BI, given we have the Microsoft 365 environment. How can a dashboard you walked us through be built within a tool like Power BI, or would we need a completely different tool with the capacity for all those performance measures, views, etc.? And this is Jane. She is in the healthcare industry.
Hi, Jane. I mean, I believe Power BI has obviously a ability for you to do some visualizations. However, one of the great things about our software is that it will link to Power BI, so you're able to pull that data into Spider Impact, and then you could utilize our interface to create those dashboards. And it's a relatively simple process. We've got widgets. You can add text and web elements and images and different things like that when you're creating these to create the look and feel that you want, while utilizing data that you already might have in a system like Power BI, because it does come with that stack. So that way you're not wasting or you're using Power BI in vain, but you're creating the visualizations in a software like ours, which can just be a little bit easier.
Very good. All right, well, thanks, guys. It is 10 o'clock, and so we're out of time, but I really appreciate both of your input on this. Anybody out there has any more questions, please reach out to us directly, either to Joe or Don directly on their emails, or on our website, balancescorecard.org, or spiderstrategies.com. Otherwise, Joe, Don, thank you for everything.
Thank you, David, for hosting. And one more time, I'd like to thank the Bank of Jamaica for allowing us to use their current balanced scorecard as an example for Spider strategies.
Appreciate it. Thanks, guys.
All right.
Thanks, everybody.